Investing is very powerful, and it is through investing that we all can be able to make money. We all can be able to build wealth. And guys, millionaires out there, billionaires out there have invested their money. I'm pretty sure by now you have had a term investing or even so investments. And you could be sitting there wondering, how can you go about it? In this video, I want to share with you 9 assets in investment. In other words, the kind of assets you could look to invest into for you to see your money increase. You are all much welcomed to the Money Daily TV. My name is Afagza Sifuna. If you are new to investments, don't worry. Sit back, relax. I'm going to share with you 9 assets you could possibly look to jump into, to invest into, and you to be able to make some money in different ways, which I'm going to discuss. So watch the whole of this video for you to understand 9 different assets you can possibly invest in. And a starting point is, let me start with what all of us know: cash. Guys, there is a way you can make your cash grow by you still holding it either in your current account or whichever kind of account out there. And I'm saying so because bank accounts, of course, a specific kind of bank accounts, allow for you to get an interest in the money they are holding for you. By the way, guys, these vary from bank to bank and even so varies by name. Not all banks out there are gonna, for example, call a given account by whichever name. But we all know and understand that most banks out there are gonna actually pay you some interest in case you're holding fixed deposit accounts with them. So bank deposits, which the bank holds for some duration of time through the predetermined kind of accounts, are going to attract some interest. But guys, I'm starting with these because this kind of asset holding or investing is the one with among the lowest interest rates or the lowest returns. And I'm saying so because rarely, in fact, under no circumstance do you find, for example, interest paid to any deposit account superseding the inflation rate in any economy. That tells you that holding this money in the grand scheme of things or in aggregate, yes, you could get some additional cents to it or a small percentage add to it, but it doesn't guarantee you, for example, this is going to be able to beat inflation from the point at which you deposit in the bank to the point at which you're going to be cashing out after fulfilling the terms. So guys, this is among the worst kind of investments you can do. But of course, this is no worse than, for example, you spending money on frivolous things or even holding cash in hand. If you have no other option, have your money in some fixed deposit account in a bank for you to be able to attract some form of interest. Okay? And then the second asset you could look to invest into is what is called bonds. Guys, you could be sitting there wondering, you've heard the term bonds and so forth, but what exactly is bonds? You know what, guys? A bond is a debt instrument which essentially represent a loan which has been made by investor or even investors to a given borrower or set of borrowers. Let me break it down for you. The term bond or this kind of borrowing or modality of borrowing is usually done by institutions out there. Think about governments. Think about other corporations out there. They sometimes come to the market, okay, to borrow money from investors. And of course, when these investors give money to these other entities out there, it is for these entities, for example, to use this money to maybe finance their operations, maybe finance purchases which they are planning to do, or even so invest in other projects. And when it is all said and done, guys, these bond investments usually attract interest too. In other words, these particular investors are going to be able to cash out interest on their initial bond investment at a particular point in time. But also there's something quite fascinating. Given this kind of asset investing is mainly driven by institutions out there Also, we periodically see kind of interest determination in a skewed way, whereby due to this kind of investment, these are heavily, we're talking about these bonds, are heavily traded during periods that we call quantitative easing, or simply put, when the Federal Reserve or even so the central bank of whichever country out there, raise interest rate. And that's so because bonds are pegged on interest rates. So when you see, for example, the Feds out there or even central banks out there raising interest rates, is when we see trading in bonds by investors. A kind of peculiar kind of behavior, but that's how it works. Just for investors out there to also ensure they max out their interest in the possible ways possible they can. Okay? And then the third investment or asset in investment which you need to know is what we call mutual fund. Okay? Mutual fund, guys, is a type of investment where more than one investor, okay, pulls their money together to purchase securities. In other words, it is mutual fund because there is pooling of investments, pooling of money to invest. And of course, mutual funds out there, there's a misconception about mutual funds being passive income. They don't necessarily have to be passive income per se. And I'm saying so because from the front facing of it, of people pooling fund, yes, it is mutual, it is kind of like passive income. But the reality is that mutual funds are actually managed by portfolio managers, whom these different mutual fund companies out there employ to ensure they are managing these pooled investments on a regular basis, to ensure they put the money down on the right kind of investment, and even so there's distributed of pooling of risk and investments across different kind of assets. Think about, for example, stocks, bonds, other securities, cryptos, you name it. There is a particular distribution, and then these particular portfolio managers ensure that they have the ideal bucket of investment to at least ensure there is a return to investors. And by the way, guys, a good chunk of mutual funds out there have what is normally called minimum investment. In other words, what is the minimum amount of money or the least amount of money you can put into these investments for you to be able to be part of that particular pool. Okay? And it's all said and done. Of course, these are managed actively in different scenarios or even passively depending, but at the end, investors get some form of money because of the portfolio element or concept which is used in mutual funds. Okay? Now, guys, let's go to the next kind of asset here. Let's discuss it too. And the next set of assets I want to discuss here, let me start with the ETFs. Okay? ETFs are essentially exchange traded funds. What are ETFs? ETFs are exchange traded funds, and this is a concept which came in the investment world sometime in mid 1990s. Exchange traded funds essentially are kind of like the same as mutual funds, or even so kind of like pooling of resources still in a given kitty to invest. The only difference is that exchange traded funds are traded in stock exchanges out there, unlike most of the mutual funds. Okay? And the good thing is that exchange traded funds are traded in this kind of stock exchanges out there, and even so, we're talking about them being traded on a day-to-day basis. That tells you that they are quite more volatile with regards to the movement of trading action, but also the concept is the same. It is a pulling together of different class of assets, or even so different class of kind of investment to ensure there is that distribution of risk across. Think about, for example, ETFs out there like the Vanguard ETF and other ETFs, which of course investors have been betting on for quite a long period of time for them to be able to get monies of these. The only thing that you as an investor, you have the leeway of trading as frequently as you want because they are traded as part of the stock exchanges out there. And talking about stock, guys, the fifth investment which you could look to put your money into is stocks. Stocks are essentially shares of companies out there. And by you investing in these stocks, essentially you are claiming part ownership of these companies. It is as simple as that. That's why we see, for example, out here IPOs, initial public offering of companies who want to transit from coming from private entities to public entities so that they can be able to borrow money from the public. And when they borrow money from the public or the people who put money down on these particular stocks or even shares have an entitlement to these particular companies. And because of this, the company periodically shares part of their profit with them. That's why we see annually, for example, when companies out there are releasing their financials, they normally say this year they are, for example, distributing a given number of millions, a given number of billions as dividends to shareholders. That is essentially a return on stock. Stocks out there give you return of dividends. And of course, you have options out there, for example, to cash out dividends or even to replow them back into stocks so that you can see your stake in this company grow exponentially. Guys, stocks are some of the best investments you can make. Stocks and ETFs for you to be able to make money, more so make money passively. I've talked about the kind of investments which can be done in markets, okay? Which can be done in structured financial institutions out there. Now, let me talk about alternative investments, the ones which are currently on the pink stickies on your screens. And the starting point is real estate. Guys, real estate is essentially you investing in property types out there, whether it is commercial properties, residential properties, you being a developer, you name it. But also, if you can't invest in the physical properties out there, also you could be part ownership of a given real estate piece through virtual markets. Also the same model, for example, that mutual funds out there use. Also there's collected of money out there, specifically targeting real estate properties out there, which are normally called REITs, real estate investment trusts. REITs are essentially kind of investment buses which you can also jump into for you to be able to make money in real estate even when you are not a developer. Guys, this is the kind of investment which we're talking about you possibly making generational income. More so if you're jumping into real estate and diversifying very well, we're talking about you being able to make lifetime income because a good chunk of real estates out there stay for tens and even some hundreds of years. This is also a good investment, more so if you have huge chunks of money which you can possibly put down. And then guys, another alternative investment which I want to talk about, and that is investment asset number 7 in this list, is what we call hedge funds. Hedge funds are essentially investors betting on beating the market to a higher return, what essentially is called the alpha. Look here guys, there is a class of investors out there, and unfortunately for hedge funds, it usually requires a minimum net worth for you to jump on these, because hedge funds can give you very, very high return on investment, assuming all goes well, and then your alpha is on the positive side. But also, stuff can go really down badly, and you could end up losing a huge chunk of money. That's why a good number of hedge funds out there require minimum investment net worth, and most of them out there you are usually asked for at least $1 million for you to be part of this elite club. In other words, hedge funds where investors put money down on a given class and then they bet on delivery beyond the market returns, which of course we all know a good chunk of billionaires out there have actually made insane money as hedge fund managers, as starters of hedge funds out there. But also it tells you it calls for someone to be tech savvy, to be mathematically astute, and even so, when it's all said and done, it isn't all the day that you beat the market. But in case opportunities arise, we have seen investors out there becoming millionaires and billionaires. But as said, this requires minimum investment. Okay? And then the other alternative investment which I want to talk about, and this is the asset number 8 or investment type number 8, is private equity fund. Look here, guys. Private equity fund is just the same model as, for example, mutual funds or even so, the hedge funds. But the only difference is that this is somewhat more private, and then the class of investors most of the time have an advisor who coordinates and even gives about the call to actions to these investments which the particular private equity is gonna make. But also these particular investors who put down money are gonna see their money being invested on different kind of assets out there which are gonna assist them be able to also make money. The only difference is that this kind of private equity most of the time is mid-term to long-term outlook horizon. We are talking about, for example, 10 years or more, so that these private equity investors can be able to realize maximum benefit. Okay? And then, guys, the ninth kind of asset you could invest in, and also it's worth sharing, is commodities. Commodities is that essentially you investing in commodities out there which have high value or even so are traded frequently. For example, in petroleum oil out there, you, for example, investing in precious metals, you investing in agricultural products, you name it. And even so, beyond just investing in the current moment volatility, also we see, for example, those savvy investors out there betting on futures. In other words, betting on future prices of these products or commodities so that they can be able to realize a return. And by the way, if you didn't know, one of the biggest concepts of hedging, which a good chunk of companies out there do, is them hedging against future fluctuations of given commodities. And through these, they can be able to have some form of clarity with regards to their financials as they have kind of like invested or bet on a given kind of a commodity being at a given price, and this is gonna assist them ensure there is stability in operations. Having said that, guys, what do you think about these 9 assets in investment I've spoken about? Of these, which ones do you think you're gonna invest in? Share down below in the comment section. Let's continue discussing. I want to know which of these assets you are upbeat about and you are really psyched up to invest in for you to be able to see your money increase. Share down below in the comment section. Let's continue discussing. Cheers, and you all stay safe.